All right, let's talk about something that is absolutely crucial for every single trader, but almost everyone gets it wrong. We're talking about confidence. And we're going to challenge a core belief you probably have. What if I told you that real, unbreakable trading confidence has basically nothing to do with your profits? Let's dive in.
So let's just get right to it. I want you to ask yourself, what does confidence in trading actually mean to you? For most of us, the immediate answer is something about winning, about being right. But you're about to see that's not just wrong, it's actually dangerous.
Okay, let's just blow up a couple of myths right now. The common idea is that you feel confident when you're making money every day, or when you perfectly call the market's next move. But that's not reality. It's a trap. Chasing that feeling is, believe it or not, the fastest way to absolutely destroy your confidence.
So if that's not it, then what is real confidence? It's not the arrogant feeling that you're going to win. It's the deep down, quiet belief that no matter what the market does, even in the absolute worst case scenario, you can handle it. It's about being durable, not invincible. Now, to figure out how to build this kind of confidence, we first have to understand why it shatters in the first place. So let's walk through a little story, one that I bet is going to feel very, very familiar to a lot of you out there. So imagine this trader, right? They're sharp, they've done their research, and they're calling the market's general direction spot on. So they get aggressive, jump into a trade, feeling really good about it, and then bam! They get stopped out on some tiny, meaningless pullback only to watch the market then rip in the exact direction they predicted without them. Man, does that sting. Sound familiar?
And this doesn't just happen once. It happens again and again. You get this series of small losses, these little paper cuts, and they start to add up. The actual money lost might not be that much, but something far more dangerous starts to creep in. That little voice in the back of your head that starts whispering, "Am I just not cut out for this? Am I failing?"
And that right there is the real danger. Look, you can always make more money, but rebuilding your psychological capital, your confidence, that's a whole different ballgame. A crisis of confidence will knock you out of trading for good, long after a financial loss could have been recovered. So, how do we fix this death spiral? It all starts with a huge, fundamental shift in where you put your focus. It's about finally understanding the difference between what's in your control and what you need to just let go of. This is it. This is the whole game. You have to draw a hard line in the sand. On one side, you have your control, your trading process, your entry size, your rules. On the other side, you have the market's control, which is basically everything else. It controls the price movements, those annoying little pullbacks, and when or if you get paid. The trader in our story lost their confidence because they were obsessed with trying to control the market side of the line. Okay, so if the secret is to focus only on what we can control, then it means we need a system. We need a process-based solution that puts us back in the driver's seat, no matter what crazy thing the market decides to do next. Here's a super simple but incredibly powerful example of what that looks like. Instead of going all in right away, you start with a small tester position. If the market starts moving your way and confirms your idea, great, you can add to it. That's called scaling in. And if you're wrong, who cares? The loss is small, it's controlled, and it was all part of the plan. You're back in charge of your decisions. You see how this just changes everything? Suddenly, the goal isn't be right, the goal is follow my plan. Every single time you execute your rules perfectly, that is a psychological win, regardless of whether the trade made money. You're reinforcing good habits and building a deep sense of trust in yourself, which is the absolute bedrock of confidence. And here's another piece of the puzzle: preparation. You know, elite athletes don't just show up and hope for the best. They rehearse. You can do the same thing mentally by walking through scenarios in your head. If the market breaks this level, I will do X. If it does this, I will do Y. You're creating experiences for your brain. You're building decision-making muscle memory before you ever risk a single dollar. Now, all of this is building up to an idea that might sound a little crazy at first. It's the paradox of confidence. The ultimate form of confidence actually comes from having a really solid plan for losing. And this is that paradox in action. False confidence is all about ego. It's fragile. It shouts, "I'm going to win." But real confidence, the kind that lasts, it's calm. It knows. Even if this trade is a loser, even if I get stopped out, I have a plan and I'm going to be okay. Now that is true strength. This way of thinking reframes everything. A losing streak isn't a failure anymore. It's a test. A drawdown isn't a disaster.
It's your gym. It is the mental training ground where you forge the toughness and the discipline that separates the pros from everyone else.
Think about how they train elite soldiers, like the Army Rangers. They are intentionally put through the most brutal, stressful, chaotic situations you can possibly imagine. Why do they do that? So that when they face real chaos, their brain is already programmed to think, I've been through worse than this. I can handle it. Your periods of loss, your drawdowns, that's your Ranger school.
Okay, so we've covered a lot of the theory behind this. Now let's make it super concrete. Let's turn this from an idea into an action plan you can start using today.
Here's your homework. And don't just think about these questions, actually write down your answers. What is your exact plan of action for when things go south? After a big loss, will you stop for the day? After a bad week, will you cut your size in half? Having a pre-written plan takes the panic and emotion out of the decision.
And if you want to take it to a pro level, try this coaching tool. The next time you make a big mistake, write a formal memo to yourself. Seriously. Analyze what happened, get to the root of why it happened, and, most importantly, define the specific exact action you will take next time to prevent it. This isn't about beating yourself up, it's about structured professional learning. So why does all this work? It's simple. It creates accountability. When you hold yourself accountable to your process, you are proving to yourself over and over that you are in control of your actions. And being in control of your actions is what directly fuels real confidence.
So in the end, it really all comes down to this one simple formula. Real confidence isn't some magical feeling that comes from profits or being a great guesser. It's an earned result. It's knowing you can survive anything because you are always in control of your process.
And that brings us to the final question I want to leave you with. Take a hard, honest look at your trading. Where is your focus? Are you just counting your profits and losses, riding that emotional roller coaster? Or are you methodically, day by day, building your system of control? Because that is where you'll find real, lasting confidence. The choice is yours.